When we released this cheat sheet to our members, many of them literally doubled their strike rate overnight, and we saw a significant increase in the amount of them getting funded. One of our members said here that the cheat sheet literally cuts out 2 to 3 years of backtesting. It's truly a cheat sheet to consistency. Another was getting dizzy from how useful it is to them. Another is going to get it tattooed on them. And another has printed it out on every wall in their house. Well, today is your lucky day because I'm going to share it with you and show you exactly how powerful it is. Because by the end of this short video, you are going to have a mechanical cheat sheet for the market that will boost your strike rate overnight, give you insane clarity because you will know what to do in every single phase of the market, and patience will become easier for you than it has ever been before. Okay, that all sounds marvelous, but how on earth is it going to do that? Well, let's dive into it. If you have been fortunate enough to see some of the videos on our channel already, you may know that, if we simplify our overall trade plan and idea of what we're trying to do with our strategy, it's following our medium time frame order flow, so the main time frame that we look at. And then once price drops down to our zone, our POI, our point of interest on that time frame, we then drop down to our lower time frame and we essentially look for our execution model. Okay, so in its most simplest form, I have to wait for my medium time frame zone mitigation. Once price is there, then I drop down to my lower time frame and I wait for my lower time frame entry model. Okay, that's simple enough. Most people can get their head around it. But the problem is that every time price reaches their medium time frame POI and then they see their lower time frame entry model, they're hitting it. And that's not going to give you a very high strike rate, is it? So if we then obviously think about the market in a bit more of a realistic scenario, okay? So imagine, again, this is just one time frame. This is your medium time frame, whether that's the M15 or the 4-hour chart for you, okay? If we just follow along. So your medium time frame has a swing leg to the upside. We then get a swing pullback. And then we get a swing break of structure here to the upside, okay? So at this point, this is your strong swing low, which took out the high. So what do we expect after a swing break of structure? We expect a swing pullback on that time frame. And that is essentially what happens. But what we get is we get the internal structure of that same time frame. It switches bearish to do what? To facilitate that swing pullback on this time frame, okay? So the internal structure on your medium time frame switches bearish. Then we pull back down into the strong swing low, okay? That's when we expect the swing pullback to be finished. We then look for the internal structure to shift bullish, to realign itself with the swing structure. And then we expect that internal structure to stay bullish until it takes out the weak swing high, okay? Because the pullback is over and now we're ready to continue that next bullish swing leg. And that's where we can follow that bullish internal structure until it takes out the weak high, okay? That is the mechanical structural framework that we use. And again, that can make a lot of sense once you get your head around it. You know that's on your medium time frame, and then we can trade, or we can try and attempt to trade every phase of that market move from our medium time frame POIs, okay? So price would come into here, we get the mitigation, then we jump down to our lower time frame and we look for our entry model, okay? Again, makes a decent amount of sense, once you're familiar with this framework. However, what is very hard for people to kind of make mechanical is when you will choose to get involved and when you will choose to stay out. How do you manage your expectations of what is high probability, when to wait for more confirmation? Just to give you a quick example, when price is here, okay, what have we done? We've mitigated your medium time frame POI. So if you look at your trade plan, you go, right, I'm in my medium time frame POI. I should hit my lower time frame entry. What if I get there? But is this high probability? You're trading counter everything at this point, right? Everything is bullish and you're trying to get involved. So do you get involved there, or do you wait for your bearish IBOS so the internal structure shifts bearish? And if you do, when price comes back up here, are you going to get involved straight away? Or are you going to wait for a bit more confirmation and wait for your medium time frame chalk? Okay, cool. And then when price comes down to here, we're in a medium time frame POI. Are you going to get involved here? What about when price comes down into the strong swing low? Are you going to get in straight away when you counter all the internal structure, or are you going to at least wait for a medium time frame chalk? Or are you going to be a bit more conservative and wait for a medium time frame IBOS so the internal structure is realigned back bullish? And then when it gets bullish, are you going to trade short here because that's counter swing and internal, or are you going to wait for price to pull back here? And when price gets back here, are you going to jump down to your low time frame straight away, or are you going to wait for a medium time frame chalk or IBOS? Okay. That is the things that people find very hard to know what to do, when to wait for more confirmation, when to be aggressive. And that's just looking at your medium time frame. When you then try and bring in your higher time frame, right, and you're trying to get a more dynamic, multi-time frame analysis, it can be very, very confusing to get your head around it and to keep it very, very mechanical. Because I'd get the question a lot. Well, when you get that mitigation there, are you going to jump into your low time frame straight away, or are you going to wait for a chalk? Are you going to wait for an IBOS? When do I be aggressive? When do I wait for more confirmation? And it was very hard for me to give a very straight answer to people, because the truth is, well, it depends. Every price action scenario is going to be unique, right? It depends. What's the 4 hour doing? What's the daily doing? Where are we within structure? There's so many variables. It's very, very hard to have, you'd have like an 85 page trade plan. Okay. However, I have now distilled this into a mechanical framework, into a cheat sheet that literally tells you what to do in every single phase of the market. And that's what we're going to go through today. So, ladies and gentlemen, here it is. Here is this cheat sheet that, I hate this word when people say it, but this truly is a game changer. And I really mean that. So let me show you why. Let's take our time and let's go through it slowly. So this diagram here is exactly the one that we just spoke through, but we have some nice, pretty boxes on it that correlate with this information here on the right-hand side. So essentially what it all boils down to is you need to figure out what phase is your medium time frame currently in, okay? And all you need to do this, it's 100% mechanical, is you just need to know, are you pro or counter your medium time frame swing structure? And are you pro or counter your medium time frame internal structure, okay? So it should be very simple, right? Like I said, this is when the swing structure is bullish, because that was our last swing break of structure. So we know we're trading between that swing high and the swing low, okay? So our swing structure is bullish. Let's start with, we'll go through phase A, okay? This is the first one we're going to look at. So this is when you are pro swing and pro internal. So if price action is at this point here where I've circled in orange, what do? You ask yourself, if I'm looking for longs, am I pro swing? Well, yes, because the swing is bullish, okay? So I'm pro swing. Am I pro internal? Well, you can see here, this is the internal structure, right? It was bearish to facilitate the swing pullback. When it shifts bullish, it's now bullish, right? So if you're looking for longs, you're in phase A because we're pro swing and pro internal. So what this cheat sheet does is once you know what phase you're in, it tells you what the current objective of price action is in that phase. Okay, and this is super useful because then you know what to target, how to manage your expectations, and what confirmations you do or do not need to wait for, okay? So that's what I have just below. Now, I've blurred those just because I need to keep a little bit of source back for our actual members, but I'm going to drop a lot of hints that will hopefully really, really help you guys out with this, okay, if you follow along and pay attention. So phase A, pro swing, pro internal. So what is the objective of phase A? It's basically either one or two things. When we are here, it's the first one, and it's to target the weak medium time frame swing high low, okay? So because we are bullish on the swing structure, this is a weak high because it's failed to take out the low. So when the internal structure is bearish to facilitate the swing pullback, we mitigate our strong low. The internal structure then shifts bullish, right? That means the swing pullback is now over. It's done its job, and the internal structure, we now expect it to stay bullish because what is its objective? Its objective is to target the weak swing high now, right? Because the pullback's finished, and now we're ready for that next impulsive leg to take out this high. So when we're in phase A, at that moment, when the pullback's over, and the internals realign with the swing, so they're both pro trend, that's the job. So now we can look for our positions long, and we can technically hold them all the way up until that objective has been complete. Now, phase A, in theory, should be highest probability because you have full alignment. So this is where you probably don't need to wait for any more confirmation. When price pulls back to your medium time frame POI, you can jump down to your low time frame straight away. Now, of course, you still need to know how to select the correct POIs. You still need to be looking for high probability POIs. But if you already know how to do that, then this is where I would be more aggressive and not wait for any more confirmation, okay? Now, the only other time you can be in phase A that's slightly different is when price has broken your swing high low, okay? Because at this point, price can be up here. Technically, that's still phase A, right? Because it's pro swing and pro internal. But buying up here, right, if we get a move into this demand, is a very, very different trade from buying here, even though technically they're the same phase. And why is that? Well, because after a swing break of structure, what do we expect? We expect a swing pullback on that time frame, okay? So you have to accept that this is a lot more risky because we could be about to change trend, right? That's all something you need to bear in mind. But again, because that's phase A, if I'm looking to trade this and I want to be aggressive buying the continuations after the break, I'm not going to wait for any more confirmation on my medium time frame. I'm not going to wait for a medium time frame chalk from that POI because there's not a lot of space to work with. You want to be aggressive, get in and out, okay? So that would be, trading phase here, where you're just trying to trade it up towards the next supply before, where you're expecting that swing pullback to kick in, okay? So phase A is relatively simple and in theory should always be the highest probability, and that's where you want to be aggressive most times, okay? So phase B, this is when, again, we are buying, which is in line with the bullish swing structure, but we are counter the internal trend, okay? So what is the objective of phase B? It's when we are anticipating the end of the swing pullback, right? So we think the pullback's over and the internal structure is about to shift in line with swing structure. So in this case, it's about to shift bullish. That is really the best time to be trading phase B, right? When we're down here, this is probably the best time to trade counter the internal trend, because remember, why is the internal trend bearish? The internal trend is bearish to facilitate the swing pullback. So if we're trying to anticipate the end of that, when is that most likely going to occur? It's most likely going to occur when we pull down into the extreme demand at the strong swing low, right? We've mitigated that level. That's when we can anticipate its highest probability to trade against the internal trend and buy in here, okay? Because we're anticipating into the pullback and the internal is going to reverse. Now, it's up to you. Do you want to trade on your lower time frame as soon as we mitigate, your level, or do you want to wait for a little bit more and wait for that medium time frame chalk so you have a little bit more confirmation? Or maybe you don't want to trade phase B and maybe you just want to wait for that IBOS, let the internal structure realign, and then you're in phase A, okay? So what I would say to you is in most circumstances, it's fine to be aggressive if we've mitigated, your extreme demand, that's well priced, high probability POI. I'm wanting to be a bit more aggressive there in phase B and get in long straight away. Or you may want to wait for, at least that chalk to signal that the internal pullback is starting, okay? Now, what you have to also realize is phase B is not just going to be here, it's going to be here, right? Because that's pro swing, counter internal. It's going to be here, and it's going to be here. So, they're very, very different trades, because if price is here and you look down and go, right, well, I'm getting long, I'm pro swing, but I'm counter internal, so I know I'm in phase B. And you go, right, is this a good trade to get long here, right? Maybe you're, because remember, you need your medium time frame POI to the left. Is this a high probability trade? Should I jump in now, as soon as my medium time frame POI has been mitigated, on the lower time frame? Is that a high probability trade? Well, what's the objective? The objective is to anticipate the end of the swing pullback. So you have to ask yourself, is the pullback likely to end here? Probably not, right? We're in the premium. We have unmitigated demand below. We haven't pulled back that far. That is not a high probability trade, okay? So this is where you either want to ignore phase B there, or, if we get a little bit lower, say when we are in the discount of the swing, i.e. down here, or we're getting a little bit lower, then maybe you want to trade that, but you probably want to wait for like a medium time frame chalk, so you have a little bit more structural confirmation, and then you probably don't want to target much past the medium time frame supply there, right? Because there is cause for lower prices. But once we actually mitigate the extreme, that's when you can be more aggressive in phase B and maybe get in before you wait for a medium time frame chalk, okay? So can you understand now that as you work out what phase you're in, you then need to look at, well, what's the objective of price in this phase? Does it make most sense that, I want to be trading in here, i.e. I'm anticipating the end of the internal reversal, I'm anticipating the end of the swing pullback. Does it make sense to anticipate there when that's phase B? No, but it does make a lot more sense here, okay? Now, here's a little bit more source for you. When would it make sense in phase B not to be aggressive right at the extreme? Well, that's where higher time frames come in, okay? So let me just draw something quickly for you. So imagine your higher time frame is bearish, so we get a swing breaker structure on your higher time frame here, right? It's broken the swing low, and let me just draw this out. So this would be your higher time frame supply level up here, okay? And this is a strong higher time frame high. Why? Because it's done its job and it broke the swing low over here, okay? So now, what do you expect after that higher time frame swing pullback? We expect a pullback, right? So the medium time frame will switch bullish to facilitate your higher time frame pullback, okay? So what I was saying earlier is, when does it make sense in phase B to not be aggressive here and to at least wait for a chalk, or maybe wait for even more and wait for phase A, wait for that internal structure? When would it make sense to be more conservative even though you're trading from the strong swing low? And this is where your higher time frame analysis comes in. Because imagine price is here, right? Coming into your higher time frame strong high in your higher time frame supply, right? So that would be where we're here. Imagine these are the same. So you're coming into that level. So why did your medium time frame switch bullish? It switches bullish to facilitate the hard time frame pullback into that supply. So now we're there. What do we expect? We expect the next bearish higher time frame leg to the downside. So if that's going to happen, what is your medium time frame going to do? It's going to shift bearish, right? So that's when it makes sense, is if we have mitigated, a strong high in the higher time frame is bearish, and we're coming down to here, that's when you have to use multi-time frame analysis to realize like, well, actually this low is probably going to go now and we're probably going to switch bearish, okay? So that's when you need to, bring in that other time frame. Now, what this multi-time frame analysis also helps you with is phase D. So I'm jumping a little bit ahead here, but that is where you are going to trade counter swing and counter internal. That's when it can make a bit more sense. Why? Because the higher time frames are high probability, right? It's high probability to get short here, right? To try and anticipate that that's going to be the move, okay? But what I would say to most of you is what I recommend is phase D is very aggressive and avoid until you are already consistently profitable, because you're trading counter swing and counter internal on your immediate time frame, your medium time frame. At least wait for a medium time frame chalk. Most people avoid this. When we released this cheat sheet, people then, our members went through their trades and they categorized all of their recent trades within this 4-step process, within these multi-time frame phases, and they looked at their strike rate and they looked at the P&L that those phases contributed. And nearly all of them found that most of their losses were coming in phase D, because they're trying to call the top or bottom of the market. They're trying to get those sniper entries. They're trying to, get the sniper entries and whatever it is. It's very, it's human nature to want to try and catch those reversals. Now they've just removed them. It's very easy to mechanically go, well, that's no longer part of my edge. It's not part of my trade plan. And that's why I'm talking about doubling your strike rate overnight, because you can mechanically do this, okay? So phase D, ignore, I pretty much never trade it, or I'll at least wait for a medium time frame chalk. But it's only in a situation like this where the higher time frame gives me a lot of ideas to work with. Now there's a lot more information that I have on phase D and things, but I don't want to go into that because this will already be an hour-long video. Now the final phase that I jumped ahead a bit is phase C, where you're trading against the swing trend, but at least you have the internal structure on your side, okay? So the time that it makes most sense to do this, and actually I think it's quite high probability, I have a decent strike rate with this, is when it's the start of the swing pullback, okay? So again, where have we mitigated? We mitigated a decent level of supply where we expect that swing pullback to start, but we don't just jump in on phase D, right? We're patient. We wait for the internal structure on our medium time frame to shift in the favor of the direction we want to go, because what is an IBOS signal? It signals the start of that pullback. So when that happens, what do we have? We have a strong internal high here that took out the low. Okay, so when price is coming back up here, we're shorting from a strong piece of internal structure, and risk to reward is on our side. When it's that first IBOS and you're trading the start of the internal pullback, that's when it's highest probability, because look here, what's the objective? To play the medium time frame swing pullback. So if you're getting in at the start, you have the most risk to reward to play that pullback, right? Whereas if you're trying to play phase C, like say all the way down here, right? Because this is, if you're shorting, you're pro-internal at this point, right? But you're counter swing. But where are you doing it from? You're doing it after the pullback is most likely finished, the swing pullback. So now you're trying to short here against the extreme demand being mitigated at the low, right? Is that a high probable area to do what? To play the swing pullback? No, right? Because that's where it's most likely to end. So that's where phase C is very, very different trade to trading up here. We want to be doing it at the start. Okay, so always ask yourself, and that's what I've written here, what is the current objective of price and what has been mitigated? Well, here is the objective of price to play the swing pullback. Probably not, because we've already come off the extreme. And what has been mitigated? Extreme demand. Not a good time to be trading trade C, okay? The other last thing I'll add to phase C before we look at a real example is another thing that makes it high probable, again, is your higher time frame. If we're up here, we should be here, and we're expecting that next bearish leg on the higher time frame, so therefore we're expecting your medium time frame to shift bearish. That is where if you're taking a trade here, you might not want to be as aggressive with your management as normal, because usually you want to be in and out, because that swing high low could form any point, right? But if the higher time frame is suggesting that the medium time frame could shift bearish, right? We get that break there, which would be this break here, then that's where you might want to take that phase C and hold on to your trade for a little bit longer. Okay, let's go look at a real example. So here we are on euro dollar on the 4-hour chart, and we're just going to use this as our higher time frame. So very simply, we have had a 4-hour swing break of structure. This becomes our new swing low, and after a swing break of structure, what do we expect? We're going to expect a swing pullback on that time frame. The only other thing to note, to keep it nice and simple, is we haven't yet mitigated our higher time frame supply. Okay, if we look left, we haven't quite come into it. So hold that in mind. The bit of price action that we're now going to look at, okay, on the M15 is we're just going to look at this leg of price action here as we go and jump down to our medium time frame, which is going to be the M15 in this instance. Okay, but all I'm trying to say here is we have to have in the back of our mind that that higher time frame pullback could start in a bit. Okay, so this is our main time frame. This is where I spend 90% of my time looking at, analyzing, and thinking about. So here I've overlaid those phases. Let's go through it slowly and make sense of it. Okay, so the M15 is bullish. This was our last break of structure. When we get that break of structure and we're at this point in the market, what I want you to ask yourself is, what phase am I in? So if price is here, it's very, very simple. It's mechanical. Is the swing structure bullish or bearish, right? It's bullish. Is the internal structure bullish or bearish? It's bullish, okay? So if we're looking for longs, we are pro swing and we're pro internal, and we can do that. But what do we need to buy? We need a medium time frame demand zone. Are there any medium time frame demand zones here? No, there's none nearby. The nearest one is all the way down here. So what do? I wait. I'm not going to take any positions, all right? Whereas what loads of people do is they're sitting on their execution time frame and they're trying to trade continuations after a medium time frame break of structure in the middle of no man's land, with no medium time frame demand to back them up. Don't do that, right? It's just stupid. Okay, cool. So I can't take a long. Can I take a short? Well, what would shorts be? They would be counter swing, counter internal. That would be phase D. I'm not going to do that. Okay, let's leave it alone. We don't have anything on our side. So you be a bit more patient. You sit in your hands. What do we get? We get a sweep of that week high. Again, I'm not going to trade it. I'm going to wait for at least phase C. So what do I need to see for phase C? I need to see the internal structure on my side. I need to see that bearish IBOS. So what do we get? We get that bearish IBOS here. Okay, happy days. And now we are in phase C. Now it makes a lot more sense to look for shorts, okay? We now have a strong internal high because that broke the low. We now have our medium time frame supply at that strong internal high. This is high probability to play phase C. Why? Because what is the objective? It's to play the swing pullback, okay? So we can look to play that down to demand. Now the other, remember, objective is to anticipate your medium time frame swing is going to actually reverse trend. And what that means is that this might switch bearish. But we only do that if what? If the higher time frame suggests. So remember, in this scenario, we have a little bit of evidence to suggest that the M15 might switch bearish because we're expecting that 4-hour pullback, right? So that could happen. But what are the odds of that 4-hour pullback happening yet when we haven't yet reached 4-hour supply, right? Most pullbacks on the same time frame are going to happen from supply and demand on that same time frame. So in more simple terms, a 4-hour pullback is more likely to happen from 4-hour supply. We haven't quite got that yet. So let me keep it nice and simple. We're in phase C, the internal structure shifted bearish. We've come into our strong high. This is where you can look for that trade. Now, some of you might be happy to get in straight away. Some of you might think, well, it's still counter trend. I'm going to wait for a little bit more. And that's where you can wait for that medium time frame chock. And there's your entry there. Okay, cool. So then we get another move to the downside. Now, when we are here, right, what phase would this be if you want to get long? Well, we would be counter the internal trend, right? Because the internal trend is bearish, but we'd be pro swing, right? So we're in phase B. Denoted by the purple box, kind of gave it away there, right? So should we trade this? Well, what's the objective? The objective is to anticipate the end of the swing pullback and the internal reversal. Okay, so ask yourself, what is the likelihood that this is where that swing pullback is going to end and we're going to go? Well, what confidence do we have to suggest that? If we look left, do we have any significant demand? No. Okay, maybe we're around the EQ, so roughly around discount pricing. That's about all it has going for it, okay? So don't jump into your low time frame straight away. Like, it's a trade that can easily be avoided, right? Leave it. Now, when we push a little bit lower and we get a mitigation down here, right? This is phase B. It's the exact same phase. But do we now have a lot more confidence to suggest the end of the swing pullback? Well, where are we? We are at the extreme strong swing low. We've mitigated extreme demand. We've had a very strong reaction from it with that wick. That's perhaps now where you may want to be aggressive and try and trade that, because this makes a lot more sense to anticipate the internal reversal, right? That it's going to shift bullish and into the swing pullback. Now, you don't have to do it. It's quite a big POI. You can wait for more confidence, liquidity and stuff. I'm not going to talk about that now, right? And you can get involved. But one thing you want to bear in mind with phase B as well is if you are going to trade in here, you do have to understand that this is still a strong internal high at this point, okay? Because it is bearish. So if you do want to look for longs, try and get in early enough that you have enough risk to reward into this supply here, because there is still some possibility, right, that supply could hold and we could get another leg lower. So if you're going to try and trade phase B, try and have enough risk to reward into that strong high or low, right? Phase B then ends as we then get the bullish IBOS there. So now at this point, what's happened? The internal structure has realigned itself with the swing structure. They are both bullish. So what does that mean? It means the swing pullback is now likely over And now at this point, what's the expectation? The expectation is that this is a strong internal low, and we expect the internal structure to stay bullish until it does what? Until it takes out the weak swing high. Because remember, in phase A, what is the objective? To target the weak medium time frame swing high. So as soon as we're in phase A, that's what we want to look for. We want to look for longs to try and target up to there, okay? Now, when price is at this point, can you trade it? Well, what phase is this? If you're shorting, you are counter swing and counter internal, so you're in phase D. So that's why I recommend to most of you, don't even bother. Leave it alone for the most part, right? Get consistent at the other phases, and then you'll build experience. You need to earn the right to trade phase D. That's what I would say, okay? Stick to the simple stuff. There's your phase A trade. You don't need to wait for a medium time frame chock or IBOS when we come back into that POI, right? You've got full alignment. Get long, get aggressive on your lower time frame, get involved, and you've got a high probability trade to target there, okay? So hopefully you can really start to see the power of this, of literally just super mechanical. You know what phase you're in, you understand the objective of that phase, and then you need to now define what criteria you want to see for extra confirmation, okay? I give a lot more information to our members here. So, if you're interested in getting that cheat sheet and, you want a lot of the hard work done for you, come join us. We'd more than, love to work with you. But yeah, this has been super great, especially when you're backtesting. You can now go and categorize all of those trades, and it makes it super mechanical to collect those stats, see what strike rate you have in each area, and it will honestly transform your trading. So come and join us, come and get a membership if you want to come and have this cheat sheet. But if not, watch this next video and make an instant improvement to your trading.